W1120 AM and W275CM FM. Concord, Boston. The Money Matters Radio Network.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing Dolan with your Financial Exchange Quick Tip of the Day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, how can you ensure that your kids' inheritance can be protected from future divorces?
Well, estate planning, as you know, does things like avoid probate, protect assets from nursing homes, and reduce taxes. But you know what? The family behind the estate plan can be more important. And so the trusts live on after you die, and you can have language in there that divides the assets to the children, but doesn't just pay it out, right? It holds it in trust for them and allows them to be trustee, but just not take it. In order to get it, they have an independent trustee that can say yes or no. And that way, by not owning the asset, if they get divorced down the line after you're dead, and the other side says, hey, I want half of what's in that trust, you're going to say, that's great, but you have to ask the independent trustee. So it's now not going to be available to you. And more than just the ability to say no, it's the fact that you don't own it. So if you don't own it, it's not a marital asset to begin with, so it should not be even subject to the divorce. So learning how your trust works after you die can oftentimes be more important than when you're living, and it does more for you after you die than when you're living sometimes.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Kicking off Wednesday here on the Financial Exchange, Chuck, Mark, and Tucker with you. And big stories. Look, we got a 4 p.m. announcement from the Trump administration as to how they are going to proceed with tariff policy. And quite honestly, no one has any idea what is coming here. The Bloomberg this morning reported that the plans are still in flux and they're still trying to kind of finalize a decision. The Wall Street Journal just a little while ago reported that the U.S. Trade Representative Office brought President Trump a new potential plan to the table this morning. And so we have absolutely no idea what we are going to see in terms of tariff rates on which countries, but we're going to know by the end of the day today. And I think what's interesting about this, again, I'm not going to speculate on what we're going to get because that's useless. And honestly, no one cares what my speculation is on what the tariff rate is. I'm not in a position where I decide any of this, so who cares what I think about where this is going to land. What I do think is interesting to explore is what's going on with markets this week, because there are two different things that I think are interesting to watch on this. And the first is, hey, how do markets behave before and after the tariff announcement? But the second piece is going to be, hey, how does the U.S. economy actually react afterwards as well, which is going to take a longer time to play out and will eventually influence markets as well. But what I find interesting right now is, look, we've been getting closer and closer to the tariff announcement. Again, time moves in one direction, at least as far as us, humans can perceive it. And so every day we've been getting, a day closer. And the story last week was pretty straightforward. We had, a little bit of a rally to kick the week off on March 24th after, I think it was the piece over the weekend, hey, we're not going to be getting any sector tariffs from the Wall Street Journal. I think that was, when this was published. And 2 days later, on Wednesday, President Trump comes out and says, no, I'm imposing auto tariffs beginning, shortly into April. I think it's April 3rd is what he said. And so March 26th, markets sell off. They sell off again on last Thursday and again on Friday. So you kind of get this puke into the weekend. And not just a puke into the weekend, but also something really interesting where after hours on Friday, normally the after hours Friday trading session is pretty quiet. Everyone goes home, everyone closes up shop, everyone's like, bye Felicia, I'm getting out of here. And instead, after hours Friday, you get a continuation of the puke. Friday after hours puke. Rare, but, happened. And this typically is an indication that you're going to get a bad open in the futures market on Sunday night in the event that nothing happens in the, intervening time, that you don't get any announcements over the weekend, which we didn't. So futures open, pukey McPuke face on Sunday night. S&P futures down 1% basically right off the bat. And you're like, oh, this is going to get, kind of gnarly heading into, the announcement on Wednesday. The open on Monday. So again, I'm kind of building this story over, a few days here. The open on Monday confirms said puke. The S&P actually falls about 1.5% at its lowest on Monday. And then rallies and finishes positive, not just a little bit, like 30, 40 points positive for the day. It then yesterday falls, again, about 2/3, maybe 0.75%, and then rallies and finishes up about 1/3%. And today, again, early trading, you look at it, you're like, okay, S&P's down 1%, and then rallies back almost to flat, and who knows where it ends up by the end of the day. But what I do find interesting on this is, hey, if markets in the aggregate were expressing, any fear about what's coming, it's not being demonstrated in the price action of stocks as a whole right now. And that's kind of interesting given where things looked like they may have gone, Friday evening heading into Sunday evening. It looked like this could, be kind of a gnarly week, but to this point, it looks like stocks are not being largely impacted by the pending announcement at 4 p.m. today.
Yeah,
which is kind of interesting.
For reasons you've already mentioned, I think we don't know what it will contain. Is this going to be a lot of theater and glitz? It seems to be set up as a reality TV show event. The schedule released by the White House reads like a reality TV show. A new wonderful policy will be introduced at 4. Markets will react at 8. The world will bow at the regime's feet. And I say regime just as a group of people running the show.
Sure.
I'm not comparing them to the Khmer Rouge or something. It's comical. But it's all theatrics. I'm not going to judge the theatrics of it. Maybe politically it'll play brilliantly, but economically it could be just a brief puff of smoke and nothing.
We have no idea.
Right, which explains the relatively staid or given the harm that tariffs could do. Stocks don't seem to be flinching, at least dramatically at this point. So it seems they seem a little bit complacent. But tomorrow morning could be a totally different story.
I'll make the case, and I know that this is going to sound kind of weird because everyone's been focused on this announcement for at least the last like 2 or 3 weeks. Ever since markets bottomed in mid-March, everyone's kind of been forward looking to, okay, what are we going to get April 2nd? What are we going to get April 2nd? I think it's almost people have been viewing this as like the end date where, okay, we get clarity and then we move forward.
Yeah.
What if that's not really the case? And what I mean by that is not that we don't get clarity. Like we may get, okay, here's exactly what the policy is going to be. I'm not saying that we won't get that, but more, hey, what ultimately is going to matter in all of this is not what the announcement is today, but how the economy then evolves over the next 6 to 9 months and how the policy evolves with the economy, because as we have seen with previous tariff announcements, what you get during the initial announcement is not often where the policy ends up landing in its final form.
Yeah, I don't think anybody believes exactly what you just said. He may be using this. This is the art of the deal. And so to understand this, you have to understand the art of the deal. And the art of the deal evolved in Midtown Manhattan, buying and selling buildings. So sometimes you go in all hot and heavy, it's saying you want it, and then you walk away at the last minute, or you walk away when you're at the bank with the seller. This is all the what's the word I'm looking for? The like a ritual, I guess, associated with that type of business. He's doing the art of the deal, which is his MO. Now, with respect to our economy and really the world economy, does the art of the deal translate to this domain? We're gonna find out. I don't think it does, because statecraft and policy making, trade policy making specifically, is different than buying and selling buildings. But this is just the art of the deal. You pull out at the last minute. You say you really want it, then you don't. Then you say bad things about the other guy in the newspaper. Then you go to his kid's wedding the next year because all's well. And then you have a breakup the year. It's the chaos of the domain in which he made his chops, and he's applying that same mentality here. So no, I wouldn't expect whatever's announced today to be policy. Friday, a week, a month, never mind a year. That in and of itself, though, is bad for investment and therefore growth. None of this is good for economic growth. To keep everybody guessing in a perpetual state of confusion, as you've pointed out many times, causes businesses to hold off on making investment decisions, which in the long run will hamper, and in the short run too, economic growth.
Let's take a quick break here. When we return, let's talk a little bit about what we are seeing from auto sales. We got a bunch of data late yesterday and early this morning. We'll talk about what Q1 auto sales look like right after this.
There's only one show that follows Wall Street's continued volatility. Keep it here all morning long on the Financial Exchange Radio Network.
Preparing for retirement can be agonizing and might actually feel like a full-time job. This is Mike Armstrong from the Armstrong Advisory Group. Creating a budget that fits your goals and needs in retirement is one way to alleviate some of that stress. Our new guide is called How to Build a Retirement Budget, and it contains several strategies that may help you coordinate your assets in a way that allows you to enjoy financial peace in your retirement years. From understanding your income sources to setting up the proper withdrawal schedule, this guide can help you build a complete budget that covers all of your retirement needs. If you're at or near retirement age, give the Armstrong Advisory Group a call at 800-393-4001 and ask for our new guide today. That number again is 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan, the experts in elder law, has written a new guide that may help ensure that your assets are protected for years to come, while helping you avoid unnecessary mistakes during your planning. As an example, the new federal estate tax exemption is nearly $14 million. That could lead to a larger inheritance for your family members, but still raises concerns. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and they are the perfect place to take your next vacation. Enjoy spectacular beaches, world-class cuisine, and a wide variety of water sports. Don't miss your chance to visit America's Caribbean paradise, the United States Virgin Islands. Go to visitusvi.com for more information and to book your trip today. That's visitusvi.com.
All right, so we've been getting a whole bunch of auto sales data over the last 24 hours or so. The different manufacturers report. We also get kind of a national report on what we saw. Total vehicle sales for March moved at an annualized pace of nearly 17.8 million units. To put this into context, the prior month came in at an annualized pace of 16 million, and the consensus estimate was 15.9 million for this month. Also, if you look at this number, it is the highest pace of auto sales in a month since April of 2021. So it is very clear to me, especially given the announcement last week and then the commentary that we've gotten from different auto leaders. As an example, Randy Parker, who is the CEO of Hyundai Motor North America, said, quote, "This past weekend was by far the best weekend I've seen in a very long time." This obviously all spurred by the threat of auto tariffs that are set to take effect tomorrow. So you look at this and you try to say, okay, like, what does this mean? And clearly it's not something where you have this sustainable move to, this number of cars being sold this year. You're not going to see 18 million vehicles actually sold over the course of this year, but rather it's likely demand being pulled forward. And so the two questions that I think you have on this, in my opinion, number one, how much more room is there for demand to be pulled forward? Because there are definitely still people sitting there today and even probably into this weekend and the next, couple, hey, like, could tariffs get worse? Should I be buying a car now instead of, waiting till later? So there's still probably going to be some of that in April. But I think that the two questions that come out of that then, maybe this is three questions total, is I've lost count of the questions. I apologize. I was told there'd be no math. I think the other ones that arise there are, okay, how much is the demand drop off afterwards? How much demand is truly being pulled forward here? Like, do we see, a few months where auto sales decline back down to like 15 million at an annualized rate? Do we go as low as like 14 or 13? I don't know. But beyond that, the other thing that I'm just thinking of here is, I was talking to someone last week as an example who was making this very decision. And they were saying, look, I don't really need a new car right now, but I'm going to in a couple of years, and I'm nervous about what they are going to cost, so I'm going to buy one. And they're, financing a good chunk of it. And so where I land on this as kind of just a question that there's no answer, but the vast majority of people who buy vehicles either finance them or lease them. Like the person who walks into the car and puts down, the $48,000 for the average new car price today, on the desk, that person's a rare breed. There aren't many people that just go in and pay cash for their vehicle in the new car market these days. So the other question that I have then is, okay, if you're borrowing this money, now you've got this extra payment that you're making on a monthly basis that, again, the person that I was talking to otherwise wasn't going to have that payment for a couple of years at least. That is money that has already been spent now that is being sucked out of their spending power in the future. So does this have any impact on other discretionary spending over the rest of the year then? If someone now has a $500 a month car payment that they otherwise wouldn't have, hey, how does that impact their spending in other areas?
Yeah, hard to say. So I don't know. But
No,
I
have no idea.
Yeah, I will say that this is another example of how policy uncertainty affects real economic forces and variables, if you like.
And by the way,
sorry,
go ahead. So the other thing on this, like specifically talking about that, talk to any car dealer right now, and if you go to them and you're like, hey, give me your best deal right now because I'm nervous about tariffs, they're going to say to you, I have no deals. And the reason is twofold. Number one, you're not the only person saying that. Clearly, there's plenty of demand. Number two, hey, they've got you over a barrel. They know that if you have to wait, prices are going to go up. Why are they going to discount a vehicle that already may be discounted relative to what it might cost tomorrow? You will not get good discounts and deals from whatever dealers. You're not going to get those if you're showing up today. They're going to say, fine, you want the car today? This is what you're paying. Otherwise, pay more tomorrow. So good luck.
Yeah, the things you're talking about are what makes it hard to separate movements around the trend. So you asked earlier in your comments about whether or not this new seasonally adjusted annual pace was sustainable. And another way to phrase that is, are we on a new trend line here? Has the trend line moved? Or is this just a big cyclical, temporary, that is, movement around the old trend line? And moreover, if demand dries up when tariffs are imposed, will the new trend line be lower? I'm asking a couple different questions. We don't know. But these are the types of things that researchers find that these questions are the reasons why this tariff policy, and I put policy in quotes because we don't have one yet. We haven't had one to this point. It's more like this sort of whimsical on-off fits and starts type approach. Why this is infuriating. It makes the already challenging job of figuring out what is the economy doing today. Is inflation stable, going up, going down? Is growth stable, up, down, etc.? This makes it all the more difficult to make sense of the economic data we get from month to month. But that's the world we live in.
Now, on the company-specific auto sales, one of the ones that everyone was paying attention to is, hey, what's Tesla going to report given, everything going on? And so what we saw this
Chuck,
morning...
can I stop you? Some people don't know what you mean by that. They think Musk is... you think they do?
Yes.
Because I've talked to people...
Everyone knows
who
that... Everyone knows that Tesla's a controversial brand right now. And everyone knows it's because of Elon Musk.
But some people think it's just because he's just trying to cut some spending.
Well, I'm not saying that... I'm not talking about the reasons for it. I'm just saying...
Okay.
Hey, everyone knows that there's something going on with Tesla right now. Like, I'm not describing good, bad, ugly, or like what everyone thinks, because I don't give a crap what everyone thinks about Elon Musk. It's not my problem.
Yeah.
I got other things to worry about than what everyone thinks about Elon Musk. So, yeah, I describe it just as, hey, people are interested in Tesla because of everything going on. The delivery numbers were bad. They came in at 336,000 for the quarter, down 13% for the year. And they came in below expectations of 360 to 380,000 units delivered. So the numbers came in not particularly good. The stock had sold off 36% through yesterday. So, you could make a case, hey, it was kind of, pricing in something bad. So it's only down a couple percentage points today. But ultimately, this is a question of, hey, how does an automaker that's priced in this fashion find a way to stay cash flow positive given the declines that they're seeing? And what does it mean for, how their outlook looks over the subsequent quarters from a cash perspective? These are things that we'll have to pay attention to on it. Let's take a quick break. When we come back, we're joined by Todd Lutsky for Ask Todd after this.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bend you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing Dolan, the experts in elder law, has written a new guide that may help ensure that your assets are protected for years to come, while helping you avoid unnecessary mistakes during your planning. As an example, the new federal estate tax exemption is nearly $14 million. That could lead to a larger inheritance for your family members. but still raises concerns. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing and Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Build a Retirement Budget. Mike, one of the rules of thumb that gets tossed around is, hey, just withdraw 4% of your portfolio each year and you'll be fine. Is that true still?
It can be, but it also leads to some confusing conversations because that 4% rule, one, is dependent on a very specific asset allocation that was recommended by the person that created it. And two, a lot of those things have changed over time and doesn't really account for the fluctuations that every retiree sees, right? You might retire and not start Social Security right away, in which case your withdrawals could be higher for a period of time.
What about on the other side of the ledger when you look at expenses? A lot of people say, well, I expect my expenses to go down. Maybe I only need 70 to 80% of my pre-retirement income.
Yeah, I mean, this one makes sense, right? Like, you know, you're right now making money. You might be putting money into your 401k, paying FICA taxes that you won't in retirement. But this one especially, I have to say, varies a lot from person to person. That's 70 to 80% of pre-retirement income. And think about it this way, right? Do I still have a mortgage? Might that mortgage get paid off at some point in my retirement? What sort of debts do I have? Am I going to downsize to one car? Are we going to need both? What sort of travel am I planning on? And so that 70 to 80% rule can be a good starting point, but really you need to start with the budget.
Our guide is titled How to Build a Retirement Budget, and the way to request it is by calling 800-393-4001. That number again is 800-393-4001 to request our latest guide, How to Build a Retirement Budget.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, tariff day is here, and Wall Street will shift their full attention to President Trump's tariff announcement at 4 p.m. this afternoon from Washington. At the moment, the market's pretty flat at the moment. Dow is up by only 33 points. S&P 500 is completely flat, and the NASDAQ is dipping by 8 points. Russell 2000 also completely flat. 10-year Treasury yield is down by 1 basis point at 4.14%, and crude oil is flat, you guessed it, trading just above $71 a barrel. Tesla down by 2% after the EV maker saw its first quarter deliveries drop 13%. Furthermore, separate data showed that the EV maker's China sales fell 11% in March. Sticking with the tariff theme where auto stocks continue to see attention, Ford is up by 1.5%, GM up by 1%, and Stellantis, the parent company to Jeep, is down by about 1%. Meanwhile, Nvidia shares down by 1% as investors weigh how much the semiconductor industry might be impacted by tariffs. After its surge since its IPO on Monday, Newsmax shares pulling back by 49% today. Elsewhere, Encino shares down by 24% after the cloud banking firm posted weak fourth quarter earnings and guidance for the current quarter and full year. Petco up by 17% after a recent SEC filing showed that CEO Joel Anderson purchased nearly 1.6 million shares. More volatility for recent IPO CoreWeave since its disappointing IPO on Friday. Yesterday, the stock surged 42%. Today, shares up another 14% today. And Hims & Hers down by 2% after some analysts noted the company's ZEP-bound price point of nearly $1,900 per month as being too high. I'm Tucker Silva, and that's Wall Street Watch.
This is Ask Todd on the Financial Exchange Radio Network. If you have an existing estate plan or are in the market for one, Todd Lutsky is here to answer your questions and help you plan for later life. Ask Todd is presented by Cushing Dolan, serving Massachusetts and New England for more than 35 years, helping families with estate and tax planning, Medicaid planning, and probate law. Visit CushingDolan.com. Now, here's Todd Lutsky.
And as promised, we're joined now by Todd Lutsky from the law firm of Cushing Dolan. The segment is Ask Todd. It's your chance to ask Todd your estate planning questions. Last week, I think we had either 4 or 5 callers. We got through 3 of them, so there's some urgency to make sure you're at the front of the line so that we can get to your call. Phone line is open at 888-205-2263. That is the studio number to speak to Todd Lutsky right now about your estate planning questions. Again, 888-205-2263 is the number to speak to Todd. We got the phone lines open and are waiting for you at 888-205-2263. Mr. Lutsky, how are you today?
I am never better. How are you?
I'm okay.
Just okay?
Okay-ish. Well, so I knew you were coming in today.
Yeah,
so
well,
I was talking to my wife about some estate planning stuff and was like, hey, I'd like to be cremated.
Yeah.
You know, seemed reasonable. She made an appointment for Tuesday.
So that's
a little earlier than I was hoping
earlier,
for.
yeah.
But, you know, this is what it is. Todd, I want to talk to you today about beneficiaries and basically the right and wrong ways to get assets to the people you want them to end up with. Let's say that I have a child who I want to inherit property, an investment account, whatever it may be. What is the upside and downside of me just saying, hey, I'm going to put you as a joint owner on a piece of real estate or an investment account?
Well, those are 2 very big, important differences in the type of assets you're mentioning. So real estate versus, or not real versus, but real estate and, let's say, a brokerage account. Well, let's start with the brokerage account because that one's easier. So this is why we do planning, right, folks? We don't just throw people's names on our accounts, although we do, but we shouldn't. And the reason we don't do that is when you add a child's name, as Chuck indicated, to a brokerage account, and let's say it's joint. Well, you haven't quite completed the gift yet. That's true because either party can go into a joint account typically and take out the money. So until the gift is until the other party, the child, let's say, actually goes in and removes the money, that would complete the gift. Until then, you haven't actually made a completed gift. But to me, I'm scared enough just by the fact that the child could go in and take the money. So 1, that's a problem. 2, when you add a child's name to it, you've exposed that child's creditor. That child's creditors can now access half the account. So 1, I've exposed it to the kid's creditors, which I really don't like. Now, I can tell you the upside of doing that is, of course, when you pass, it will avoid probate and automatically go to that surviving joint owner. So I guess that's a positive. I don't think it is, but it's a positive. The real problem with that, though, is generally if you don't have just one child and you have, let's say, 3 kids, and this particular child happens to live close by, which is not uncommon. So for convenience purposes, you're thinking, I'm going to throw this particular child's name on not only my brokerage account, perhaps, Chuck, but also the bank accounts so that they can what? Pay bills and help me out as I need it done. Well, if you've done that on 2-3 accounts and you have multiple children and then you die, well, that child likely is just going to get all those accounts. And you've disinherited, effectively, your other children, which you might not have meant to do. So, but you've done it. So, folks, that's just a few of the problems with it, but that's why I wouldn't do that. And, of course, with real estate, it's even worse. You've completed the gift. You exposed it to the kids' creditors. You can't sell it without that person's name. I mean, without the joint owner helping you, half the proceeds would go to that joint owner. I mean, just on and on problems with putting a child's name on a piece of property.
Talking with Todd Lutsky from the law firm of Cushing Dolan. If you have a question for Todd, this is your chance to ask him live on air. Studio line is open, still with some room on it at 888-205-2263. That is the number to call to speak with Todd Lutsky about your estate planning questions. Again, 888-205-2263. We're going to take a quick break here, but when we come back, it's going to be right to your questions with Todd Lutsky. Again, that phone number is 888-205-2263. One more time, it's 888-205-2263.
Ask Todd with Todd Lutsky every Wednesday at 10:30, only here on the Financial Exchange Radio Network. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay All-Inclusive Beach Resort and Casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions. Leaving assets to your beneficiaries is a critical piece of any estate plan. Cushing & Dolan, the experts in elder law, has written a new guide that may help ensure that your assets are protected for years to come, while helping you avoid unnecessary mistakes during your planning. As an example, the new federal estate tax exemption is nearly $14 million. That could lead to a larger inheritance for your family members, but still raises concerns. There are several strategies in this new guide that will help you learn how to make the right decisions about your distributions at the right time. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you, too. Call 866-848-5699 and get their brand new guide called How to Leave Assets to Beneficiaries. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
You're listening to Ask Todd with Todd Lutsky on the Financial Exchange Radio Network.
Still got some room on the phone lines if you'd like to speak to Todd Lutsky. We got plenty of space so that you can ask your estate planning questions. 888-205-2263 is the number. Again, it's 888-205-2263. Let's go to Carlene from Florida. Carlene, what's your question for Todd Lutsky?
I have an irrevocable trust, and my nephew is the trustee, and I would like to get an equity line. Is there any way that I can do that?
So, how long ago did you set this trust up?
Oh, it was in 2014.
2014. And your house, is this your primary residence that you put in? Okay. And by chance, when you set this trust up and deeded the property into this trust, do you recall anybody using the word life estate, reserving a life estate for you?
That's what my taxes say. It says my niece and 2 nephews, it says, I can't even think, isn't that awful? SND, irrevocable. Wait a minute, I think I have it right.
Yeah,
SND, does it say
irrevocable trust.
Irrevocable trust of 2014, and it does. And above that, it says Colleen McLaughlin. That's me. Life estate, SND, irrevocable trust of 2014.
Okay, well that's very helpful. Thank you. So, couple of things. When you reserve a life estate, it allows you not only to live there, but it allows you to keep existing mortgages if you had one when you put it in, which you may not have. But to get a mortgage now, you can try. I can't tell you the bank's going to do it. Every bank's different. But you're ultimately going to need the trustee of the trust to sign off and the life tenant to sign off on the mortgage. Okay? So you're going to need both. And I don't know that the bank will actually do that. So the one thing I always tell clients when they're setting up these trusts are, you can't borrow against the property without creating, without resetting that 5-year clock. So you're way beyond the 5-year Medicaid clock. So your house is protected. So you need to think about it. If you're doing this in the future, for everybody else listening, you reserve a life estate like Carlene did, right? But you get the reverse mortgage, or not the reverse mortgage, the home equity line of credit established before you create the trust. And that way, you then transfer the encumbered property to the trust, reserve the life estate, preserves the home equity line of credit, even though you may not have borrowed against it in 2014 in this example when the trust was set up. But you established it. So now when Carlene says, I'd like to borrow, she could because she would have already had the home equity line of credit with that life estate. and she could tap the mortgage anytime she wants, and it doesn't trigger the due on sale clause. But unfortunately, Carlene, it sounds to me like you did not do that prior to putting the property into the trust. So in order for you to get a home equity line now, likely you're going to have to deed the property out, or at least the remainder interest, out of the trust to the kids, nieces, nephews, whoever you plan on leaving it to, and keep your life estate. And then all of you could go to the bank and get a mortgage and not reset the clock. If you want to reset the clock, then you need to take the property out, get it to a child or a beneficiary, whoever's listed, and have them give it back to you, get your mortgage, put it in the trust, reserve a life estate. The downside with that is you're resetting your 5-year clock. Depending on how old you are, you may not want to do that. So it's a very good question, and hopefully that answered it for you. But folks, interestingly enough, it's a new month and we've got a new guide, and doing these life estates, which was the old month's guide, you kind of give up. It's a way of leaving assets to family members, but the guide this month is how to leave assets to beneficiaries, whoever that might be. What's the best way to do it? Is it outright? Is it staggered distributions? Do I want to control it for, the divorce-proof situation? Do I want to get it to a next generation estate tax free? Do I have children that are special needs? I mean, there's so much to think about when you're leaving your assets to your children, and this guide will get you there. So if you're starting your estate planning and you're thinking, well, how should I leave my assets? Get the guide, 866-848-5699 or legalexchangeshow.com. Again, 866-848-5699 or legalexchangeshow.com.
Got another one for you, Todd. Let's go to Pam in Maine. Pam, what's your question for Todd Lutsky?
Well, it's exactly what he opened the show with. I was just at my daughter's place in New York, and we were going over everything. And there's just one daughter and myself at this point.
Uh-huh.
Don't anticipate there being any more. She does have a husband. And I have many assets over many different venues, approximately $1 million.
Okay.
But the house is the main thing for her. She's like, I don't want to sell my childhood home, and she doesn't want me to lose it, basically, to, in the event that I have to go into a home.
Yes. So, it sounds like the house is a big item, and it is for a lot of people. And so I think the type of planning that you would need to do to protect it for her, assuming you want to protect it for her. Again, we do what the client wants, not always what the children want. So I want you to know that you would be the decision maker. But if that is something you wish to do, yes, with an estate worth around $1 million and the house worth some portion of that, I absolutely would transfer it to an irrevocable Medicaid trust. Whether we reserve a life estate or not would be something we would determine then. Putting it in there is going to keep you in control. Can't get into every detail today, but you'd be 98% in control of that house. But 5 years down the road, if you got sick and went in the nursing home, it would be protected for your daughter, and then your daughter could live there, or you could control it through the trust for your daughter, any number of those things. So hopefully that helps a little, and yes, you're on the right track. That's exactly the way I would proceed.
Got one more for you, Todd. Let's go to David in... Tucker, is this Boston or Brewster?
Boston.
David in Boston. You're up with Todd.
Hi, Todd. Thanks for taking the call. Just a quick question. I'm single, and as I'm getting older, to avoid probate, what I want to do, I have a very close friend that I want to leave my 401k assets to.
Yep.
I'm going to leave my condo to my brother, but to avoid probate, my understanding is if I put that friend as a beneficiary, that friend will be able to have access to those assets provided he's able to get a certified death certificate.
So you're talking about the 401k?
401k.
Yeah. If you name a designated beneficiary at the 401k, they should be able to walk in to the institution. I suppose if they have a death certificate to prove that you're deceased, and then they'll show their driver's license so they know who they are, then they'll go pull the form the designated beneficiary form that the financial institution has and make sure it matches who's sitting in front of them. And if it does, I think that they'll be able to just take those assets. Not so easy, though, with the condo, right? What do you plan on doing with that?
Well, that I'm not sure just yet. But going back to the 401k, do I need a certified death certificate?
Yeah. Just get a certified. That's really the only kind you can get. Get him a certified death certificate, and well, he'll get it. He'll just go to the registry. He'll just go to the board there and pick it up. So yes. So I hope that helps a little, though. We gotta scoot, but yeah, the condo would be my only comment. Pay attention to the condo. Probably use a trust for that.
Mr. Lutsky, thank you so much for joining us today.
Oh, my pleasure. Thank you.
This has been Ask Todd on the Financial Exchange Radio Network. Ask Todd with Todd Lutsky has been presented by Cushing Dolan, serving Massachusetts and New England for more than 30 years, helping families with estate and tax planning, Medicaid planning, and probate law. Call 800-393-4001 or visit CushingDolan.com. The views expressed in this segment are solely those of Cushing & Dolan. Armstrong Advisory does not provide any legal or tax advice. Please consult with your legal or tax advisor on such matters. Cushing and Armstrong do not endorse each other and are not affiliated.
Still more to come as we head towards hour 2 of the show. We're going to be talking a little bit about what the 10-year U.S. Treasury is telling us about the economy and markets. Also, talking a little bit about tax legislation starting to take shape, and what are we seeing in terms of potential changes or things that are staying the same as we look to get some clarity about what might be changing in the tax code over the rest of the year as Congress looks to pass a bill to, again, either extend the Trump tax cuts or maybe modify them in a few ways. So we'll talk about that and a whole lot more as we get towards hour 2 of the show. Stick around.
Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM, Concord, Boston, the Money Matters Radio Network.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutsky from the law firm of Cushing Dolan with your Financial Exchange quick tip of the day. And today we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Todd, why can't you just add your kids to your accounts or to your house deed?
Well, you can. It's just not a good idea. So people who do that understand with an account, right, you can put a joint name on the account. Now, that doesn't actually complete the gift because you actually have to take the money out and then the gift is complete. But when you set it up, yeah, the asset would avoid probate. But if something happens to the child, it's going to be, available. Half the asset would be subject to the children's creditor. So you don't want that. And secondly, if you only put one kid on the deed, you've likely disinherited the other kids. So it's not really good planning overall. Whereas if you put the house in the kid's name, now you've actually made a completed gift of half the house and would need to file a gift tax return, number one. Number two, of course, it's exposed to the child's creditors and, yes, divorces. You could find yourself at some point owning half your house with an ex-in-law. Not sure that's a good way to plan. So please, put together trusts. Don't just throw names on deeds or on bank accounts because, as I always like to say, nothing good comes from giving assets away while you're living.
The estate planning experts at Cushing Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets to Your Beneficiaries. To get your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family, simply call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Marc Fandetti.
Hour 2 here on the Financial Exchange, and the trend that started on Monday and Tuesday has continued today, where stocks opened quite negatively. The S&P 500 down more than 1% at the bottom today, and yet we sit here at the moment with the S&P up 8 points, the Dow is up 83 points, and the NASDAQ up 15 points. So all three major U.S. indices, the Russell 2000 even joining the party, so all four major U.S. indices in positive territory. And this has been the story for this entire week so far, which is some nervousness at the open each day, and then by kind of midday or the early afternoon, it's been overcome and we've moved into positive territory. So at least at this point, the market's saying, hey, maybe we've done enough worrying and we'll, kind of go from there based on what we get from the tariff rollout at 4 p.m. today. 10-year U.S. Treasury is up 1 basis point to 4.166%. Oil, West Texas Intermediate, up 15 cents a barrel to 71.35 right now. AAA national average for gas prices moving up rapidly overnight. This appears to be, again, you always try to sort through like what is causing this and, what's going on. Is it, the whole country that we're seeing, or is it, limited to one particular area? And there seems to be some kind of price cycle in particular going on in the Midwest. Just as an example, Ohio gasoline went from $3.13 to $3.19 a gallon overnight. I don't know exactly why, but you've got something going on there. The rest of the country moving up as well, but there's something in the Midwest that's happening. But you've got gas prices now at $3.23 and 0.8 cents, up about 3.7 cents overnight, and now up about 14 cents in the last month. We've got gold today moving up $17.50 an ounce to $31.63.50. So gold continuing to have itself heck of a year, just continuing to make new all-time highs seemingly day after day. And that's what we've got moving in markets. Obviously, all eyes focused on the tariff announcement that's expected at 4 p.m. in the Rose Garden. But again, I know a lot of people are looking at this as like, okay, this is, kind of the end of this, news cycle. And granted, it might be like when we finally get clarity about what the initial tariff situation looks like. But what really matters in all of this is how it affects the U.S. economy, and those are going to be things that are felt over the next 3, 6, and 12 months. And so, not to get all sentimental on everyone, but I view this as more of a beginning than an end. It's a beginning. It's the beginning of like,
Yeah, it's
hey,
gonna
how
be
is this
okay.
actually going to play out? Like that's
Look,
what it is, you know?
We are potentially embarking on a series of long changes to the structure. I'll just try to step back and think about this as a researcher, as a forecaster, or an analyst, whatever you want to call it. The new leadership in this country has said we want to change the structure of the U.S. economy. We don't think it's working. That means we're going to be on a new trend at some point. Again, I'm just going to be very sort of clinical about this and a little bit dry. So will that new trend be higher? Will the growth rate will it be steeper is maybe a more accurate way to put it? Will the growth rate be faster or slower? Will it be more volatile? Imposing tariffs, moving manufacturing here, if indeed that does happen, if these tariffs stick, and this is a huge if, but let's say they follow through, and whether it's this regime or the next regime, which could be from a different party, and I use regime here just generically to mean group of people.
You could use the word administration and avoid, having to clarify.
But it's bigger
every
than
time.
it's bigger than Yeah, you're right. It's bigger than
just
administration.
use the word administration.
It's bigger than administration.
No, it's the Trump
there's-
administration.
Yeah, but there's people in Congress too, and there's this whole
Congress isn't doing
spirit
this.
of. But at some point they're going to weigh in, probably, whether it's under the
Just
current
use the word
administration or the
administration.
next. Okay,
The administration's
so our
imposing
current
it. Congress
leadership,
isn't.
but to me it's a little bit broader. But okay,
It's not. Congress isn't imposing it. Congress is not doing anything on tariffs.
Okay. So whether it's this administration or the next or the last kept the tariffs from the previous administration, Trump 1, the trend is clearly in favor of restrictions on trade.
Sure.
And that's not happening everywhere, as we'll talk about a little later in the so-called stack today. So the economy will get more volatile, probably. Manufacturing is more volatile than services. That means GDP is going to jump around more. That will probably translate into more volatility in capital markets, too. Historically, higher volatility in economic aggregates, as they call these time series. I don't know if actually neither one of those terms is very clear, but variables. Maybe that's not clear either. I don't know. It's been associated with lower, not higher growth. So I guess what I'm getting at here is, Chuck, no matter what the outcome today and whether or not it sticks, I think we have to brace for a bumpier ride over the next several years, maybe longer, maybe the next generation. Maybe these trends have real staying power and probably lower everything. I hope that means inflation too.
I think the big thing that I come back to on a lot of this is what the Trump administration is proposing, and you outlined a lot of this. It's an ambitious shift from where things were previously. And we haven't seen anything like this in several generations. Like, you've got to go back to the early 1900s to the last time that you've seen this type of thing proposed. And obviously the world is very different now from what it was in 1905, 1910. Like,
You're talking about trade regime specifically?
Specifically as it relates to trade.
Yeah.
It's a very different world today. And there's no one alive who has been through anything like this as it relates to the United States. And we don't know what, the exact specifics in terms of both kind of the short term, next 6 to 9 months, the intermediate term, next 2 to 3 years, and the long-term plan beyond that the Trump administration has for exactly how they want this to play out. So I think I've looked at this, and again, my personal views are not really relevant on this. I'm not in a position of, deciding what happens or not. But ultimately, it's something where I listen to what the Trump administration has said, what they have written, and what they have disseminated out into the world. And by and large, it's some variation of, hey, this is going to hurt at first. Like, they're not shying away from this. They're saying it very clearly. This is going to hurt at first. It will be better later. I think the former is something that we should take with 100% confidence. When's the last time you ever had a president or members of his administration say, yeah, we might not be able to avoid recession? I've never heard that.
Yeah, and there's a reason, because that's questionable.
It ruins confidence. Besides that, but here's the thing.
No. I'm making a technical point, though. I'm not making a political point. I'm saying...
No. I know you're making the technical point on it. It's not good for confidence when the leader says, hey, think like we may go into a recession.
It's more than confidence. It's that it's the structure of the economy and the institutions that underpin the growth that we've experienced, and it's been miraculous since the Second World War in particular. And there was a trade regime break in the 1940s. It's where the General Agreement on Tariffs and Trade, now known as the WTO,
the GATT.
Came from. The old GATT, which is now WTO. We decided, when we were the only manufacturing power left standing after the end of the World War, we decided we were going to take measures to lower trade barriers all over the world because it benefited us, not because we were nice. So there was a break in the trade regime then. It went from protectionist / what you might call mercantilist, which is really archaic and has to do with accumulating gold and stuff like that. We don't need to get into that because I don't think we're going back to it, at least not yet. But there was a trade regime break, and growth followed. Tremendous growth, unprecedented growth, and stability of growth, too. Now we're going to undo that. What is a researcher's best? I know we're not in power. We don't know what's going to happen. But if you had to answer this question on an exam, on an international econ exam, you would say, what is your best guess? Undoing that regime, unraveling it, becoming more insular. You would say more volatility and lower growth. That can't be good in the long term for equities. It just can't.
And, well, I think it raises the question of, hey, is this, when I say, look, we have questions about what the short-term, intermediate, and long-term plans look like, maybe they view this as a transitional step where it's in place for a year or two, and then after, said imbalances have been, corrected, or at least are starting to trend in the right direction, they move away from it. So I don't know. But it's a long way of saying, look, this is a big change that is being attempted here. It could end up working out swimmingly as they expect it to, or as they hope it will. It could end up going badly. I don't know.
I don't think you have to present those as 50-50, though. I think
I'm not presenting it as 50.
The weight of... No, I know you're not. I don't think we need to talk about them in 50-50 terms. It's like saying an experimental medical treatment could work, or you could go with the conventional tried and true, which will work with 80% probability. What they're doing is incredible. They're putting everything we've worked for in the post-war era on the line here.
Sure.
It seems to be out of resentment. Europe's ripping us off. This country's ripping us off. That country's ripping us off. Ohio has fallen behind.
Sure.
That's probably not a great motivation, and there's no evidence at any time from any country in the modern era that these policies have worked to foster durable growth. This is an enormous risk that they're taking, and the weight of the evidence suggests it will not succeed.
So this is where we stand heading into tonight. We don't know exactly what's going to be announced. We don't know exactly, what we're going to see, but we'll know by the end of the day exactly what is out there as far as, the initial wave of implemented tariffs that begin tomorrow. And then we're going to see how countries, companies, individuals all react to it, and that's ultimately what's going to determine how this goes. It's not going to be what the announcement is today and the immediate market reaction after. Like, what happens in the 5 hours afterwards doesn't matter. Whether markets rally, I know it's after, markets are closed, but you'll still have, the after-hour session and futures that start trading at 6 and so on and so forth. What happens tonight doesn't matter. It's going to be, how does the next year play out as far as individuals and their decision-making for themselves, their companies, and their countries. That's what's going to determine where this ends up going. So let's take a quick break. When we come back, let's talk a little bit about the shape of tax legislation that is trying to make its way through Congress. I say that like it's, self-aware and can, navigate Congress, but we'll talk a little bit about what is going on there as Congress tries to pass an extension of the Trump tax cuts.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structure structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions. Beneficiary planning and asset protection go hand in hand. Cushing & Dolan has a new guide out called How to Leave Assets to Beneficiaries, and it can help make your planning process smooth and easy. Leaving your assets to your children isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan right now at 866-848-5699 and get their new guide called How to Leave Assets to Beneficiaries. You'll learn which paths are the safest when it comes to protecting yourself and your children while avoiding unnecessary risks that can create substantial problems in the long run. That number again is 866-848-5699. Or you can request it online from our website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange. And sad news out of Hollywood after Val Kilmer passed away at the age of 65. Kilmer made his movie debut in 1984's Top Secret. He followed that up with Real Genius in 1985. And then, of course, Top Gun in 1986. So, trivia question today. What is the highest grossing movie of Val Kilmer's career? And it doesn't necessarily mean he was the star of that movie, just a hint there. Once again, what is the highest grossing movie of Val Kilmer's career? Be the 5th person today to text us at 617-362-1385 with the correct answer, and you win a brand new Financial Exchange Show t-shirt. Once again, the 5th correct response to text us at 617-362-1385 will get that t-shirt. See complete contest rules at financialexchangeshow.com.
So we've got tax legislation trying to make its way through Congress and likely going to have to go through the path of reconciliation due to the fact that any straight up extension of the Trump tax cuts probably not getting the votes that it needs in the Senate in order to be able to pass. Remember, in the Senate, you need 60 votes in order to pass legislation not using the reconciliation process. Whereas using reconciliation, you can make do with just 50 votes. So we're starting to get some details that are peeking out. And one of the things of particular interest to, I think, a lot of people in high cost of living states, whether you're talking New England, California, the Pacific Northwest, anywhere else that would qualify as a high cost of living state? That's most of it, right? The Northeast Coast and the West Coast?
I think you got it, yeah.
That's the bulk of it, I would imagine. You could probably include like parts of Texas and parts of Florida.
Yeah, if you want to start counting things like home insurance, yeah.
Yeah. Anyways, so the legislation appears at this point to be considering a $25,000 cap on state and local taxes that can be deducted, as opposed to the current the current $10,000 limit. So let me say that again without botching it in a couple different places. The new legislation is talking about raising the SALT cap from $10,000 to $25,000. Obviously, if you are allowing individuals to deduct more on their taxes, it stands to reason that you will have less tax revenue collected. So it raises the question of, hey, do you try to make that up somewhere else, or do you say, no, it's just going to be a larger deficit than we initially expected? We don't know yet because it's still early.
B. Did you say A and B? Oh, yeah, these guys aren't going to cut spending.
So I'm not saying cut spending. Here's the piece that's interesting.
Or raise taxes elsewhere.
No, the piece that's interesting, you are seeing a few pieces talking about Republican leadership raising taxes in certain areas.
That'd be great.
And I don't know if it's actually going to make it into the final legislation, just like we don't know if this will. But you do have pieces that are out there. I read two of them this morning, actually, on that very topic where, they're talking about, hey, do we create, an extra top bracket beyond what's there right now, like $5 million of income, and that's higher? Do we, do something on the corporate tax side as far as changing some of the ways that things are expensed and things like that? So it's being discussed. In general, my view on taxation and spending is really colored by the last 20 years, which is, regardless of party, Bush 2, Obama, Trump 1, Biden, Trump 2, the trend has generally been towards larger deficits in each successive administration. This is in contrast to what we saw during the 1980s and 1990s, which, again, kind of regardless of party,
larger deficits
initially and then not. People always forget that Reagan raised taxes towards the end.
Yeah, but the deficits were still like 5% of G. I don't.
They were, but like Reagan,
I'd vote for him even though he's no longer alive. Don't get me wrong.
The point I'm making is Reagan raised taxes, Bush raised taxes,
yeah, he did.
Clinton raised taxes. All three of them did, regardless of party and regardless of.
But the '86 Act was more. There were. I don't know if the wealthy ended up paying more under the '86 Act. Loopholes were closed, but marginal rates came way down.
Sure. Again,
I just don't think of that as a big tax hike. I think of it as more of a comprehensive reform.
I just find it interesting that, hey, back in the 80s and 90s,
politicians could do that.
Right. Like you had a lot of room to operate within the confines of Congress. Today you don't.
I think part of that was probably the very high nominal and elevated real interest rates of the period. We're all products of the most traumatic experience of our recent or longer term lives. And politicians were much more aware of the deleterious effect of high rates. And there was a real worry that even though the debt was absurdly small as a percentage of GDP relative to today, we're at about 100%, then it was in the 20s or 30s percentage of economic output. Politicians were keenly aware of how harmful high interest rates could be. And as a result, they were much more focused on keeping the deficit and the debt low. And Clinton was obsessed with it. Even Reagan understood it. He had bigger problems, of course. We had to win the Cold War and get the economy back on its feet. So I'll give him a pass, as I tend to do. But they were just much more aware, Chuck, I think, because of the experience of the 70s and early 1980s. We haven't been punished yet by the expression bond vigilantes was coined in the very early 1980s.
Let's take a quick break. When we come back, we got the trivia answer right after this.
bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled How to Build a Retirement Budget. Mike, one of the issues that we've seen for retirees in the last several years is significantly higher home insurance premiums and property taxes going up as well. How do people attempt to navigate this but still stay within the budget they had laid out for themselves?
Yeah, look, the cost of home ownership, I don't think this is a surprise to anyone. Whether you are buying a home for the first time or you are just seeing those insurance and tax rates that you mentioned going up, it is really impossible to avoid. And I think that's where that flexibility in the budget comes in and needs to be recognized. Because, for instance, you might have factored in a huge cost savings by moving to Florida a decade ago.
Sure.
A lot of that has been eaten up over the course of the last several years. And so you have to have a budget that can evolve with your lifestyle over time.
How often do you review that budget?
You know, I think it's important to at least get a grasp on it once a year. And you can really see costs fluctuate a lot during those periods of time. But those flexibility points are really important because you have to account for inflation, and different things inflate at different rates. So, for example, you might see that your costs of health care rise dramatically in your later years, both because you need more of it and because healthcare costs inflate faster than other types of costs. And you have to build those into the budget, even though you might be paying nothing for them today.
This month, our guide is titled How to Build a Retirement Budget, and the way to request it is by calling 800-393-4001. The guide again is How to Build a Retirement Budget, and the number to call is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange streams live on YouTube. Like our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
All right. Trivia question today was, what is the highest grossing movie of Val Kilmer's career? That would be Top Gun Maverick, which grossed over $1.5 billion at the global box office. Winner today of the new Financial Exchange Show t-shirt was David from Braintree, Mass. Congrats to David. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Piece from Bloomberg. U.S. families are packing more generations under one roof to save money. And basically what we're seeing is that a record 17% of home purchases last year were multi-generational properties, up from 11% dating back to 2012. So, again, you're seeing, this shift towards multi-generational living. Amongst buyers of all ages, I'm just quoting here from Bloomberg, 36% said cost savings was the top reason for purchasing a multi-generational home, according to the National Association of Realtors. And members of Gen X, age 45 to 59, were the most likely to make such a purchase, citing the need to take care of aging parents and because their adult children never left home, or both.
Yeah.
That sandwich generation is how you have them
the way
referred
to avoid that is to talk about things your parents, in my case, my mom, my dad passed, don't like. So I'll talk about tariffs a lot. My mom's sick of it. She doesn't want to hear it.
In order to keep them from moving in is what you're saying.
Yeah, so she doesn't want to.
Yes.
Never happen. It just won't happen.
Yes.
Now, in all seriousness, it's cheaper to move your parent in than it is to put them in a assisted living facility for several thousand a month.
It's not even close, yeah.
Not even close. So this is strictly economic, though. As I mentioned, there are methods for averting it, the outcome, if one or both
mostly
parties.
yours is mostly talking about things that they don't like?
Generally economic issues. Just droning on endlessly about economic issues.
You can also make food they don't like?
No.
No?
No, I can't.
That doesn't work?
You could add that to the quiver. If tariffs aren't your thing.
Smells that they don't enjoy in the house?
Well,
things like that.
I'm fairly expert at that.
I was thinking Brussels sprouts, kill two birds with one stone, the smell and the food that they might not like.
Taco meat smells, yeah.
Taco meat.
That's a popular one.
You think that's like something
I
that's
love
offensive?
it. No, it's not offensive, but it just gives off a smell.
Oh, it does.
Yeah, specifically turkey if you're opting for that route. Yeah.
Yep, that is true.
Yeah.
That is true. I'm trying to think of what else kind of falls into that category. There's a few things.
Making it insufferable to live with?
Well, yeah. I mean, look, there's
leave
there's
the
a lot
seat
that
up,
you can do.
or
leave the seat up.
Yeah.
Okay, I got to tell you. So yesterday was April Fool's Day, right? And
yeah, Mike made us swear of that.
What did he do?
Yeah, he just kept talking about it.
I think it was his first, like it was his first one.
So my daughter thinks that my older daughter thinks that April Fool's Day is just hilarious. Like I came home yesterday and it was just like there was like a box of pasta in my pillow. Like when I went to lay down for like it was just like all of my shoes were like in the sink. It was just like complete disaster.
My kid said the Masters was canceled, and I said,
"Good one."
No, no, they weren't.
Good one. But here's the other thing that she does that I find really funny, just on random days. You'll be looking for something, you'll be like, hey, have you seen like my running shoes? Or, hey, have you seen, my belt? And, my wife and I will be looking for it. And then I ask her and I'm like, hey, have you seen like, my running shoes? She's like, oh yeah, follow me. And she takes me over to the refrigerator and they're like the vegetable drawer. And she's just like, put them in there just to like mess with me.
Yeah.
And I'm like,
talk about stink.
I'm like, you're 4.5. Like what's this going to be like in
That's a good
5
one.
years? Or, like, hey, where's my belt? I need to wear it to work. Oh, come with me. And it's in like the tub in the guest bathroom. And I'm like, what is going on here? Like,
That's impressive for that age.
How am I going to be able to find anything in a few years? So I get a kick out of it. I find it quite enjoyable.
Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions where you'll find details about all of these amazing experiences, including a stay at the Divi Carina Bay all-inclusive beach resort and casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
ChatGPT a couple days ago rolled out a new image generation function that they have there that quite honestly, I tested it out, and it can do all kinds of, pretty cool stuff. It does everything from, hyper-realistic photos to you can have, images that are, themed in a certain artist's style that it, is familiar with. So there's some pretty impressive stuff that it can do. As a result, it gained 1 million users in 1 hour on Monday when they rolled this out. And again, the stuff that it can do is impressive. I wonder how much of this, like, the impulse fades on it. But also, the piece that I continue now to think, like, the more advanced this stuff gets, like, the stuff that it can produce is so photorealistic that you have no idea if it's fake or not in looking at it. Sure, you could, force it to make a mistake or something like that. But let's say that I asked it to generate me an image of 2 people from the financial services industry conducting a radio show about money in front of a picture of the Boston skyline photorealistically.
So you're describing us. Yeah.
I'm describing us. One is bald. Both are Italian, and neither
It's going to do Mario and Luigi. That's what it's going to do.
Not Mario and Luigi, please.
Yeah,
is
it's
what
going
I
to be a
typed
couple
in.
plumbers, a mason and a plumber.
Okay, apparently open it. Here we go. Is it running now? It just deleted my prompt.
Oh, good start.
Okay, so that worked well.
For a racially insensitive request.
I thought that was fantastic. We were going to do this in real time here, and it was going to be great. And
That's a shame.
It just deleted my... Oh, it's having an outage. So this is one of the things that they've been getting, I guess, is so much demand that it's not working. But also...
By the way, you just used as much electricity as a third world family in a month. Yeah. Bored Americans conjuring up pictures, sucking up the world's resources.
Exactly. Well, here's the thing. They're not making any... Every time I ask them to do this, they lose money.
Really?
Well, there's a reason that they limited, I think it's the free user tier, to 3 of these a day, I think it is. Or maybe it's 3 an hour.
And what's it cost if you wanted access? Full access? You don't know?
The paid version's $20 a month.
Oh, wow. Jeez.
So... Again, who knows, where this all ends up going, but this stuff is not going to make them money. This is going to cost them money.
Right.
The stuff
is this a loss leader? Sorry for interrupting.
I have to imagine that it is. The stuff that's going to make them money is when businesses can say, hey, we've got, 3 heads that we're paying $60,000 a year doing data entry. OpenAI, can you do the same data entry for $30,000 a head so that we can get rid of these employees? That's what these AI companies actually want. Like, that's where the money's going to be. And it also then raises the question of, okay, like, can you... First, it's, can you actually do that? Second is, what do you do with all the people that are displaced? The can you actually do it is still a very much an open question. I've been seeing lots of stuff from big tech companies about... hey, are we, building our own demise because, you've got workers that are now using these tools to write code and stuff, and maybe they can do that. But I don't know. I don't know if that's just such a specialized niche that, hey, you can't do that everywhere, or if they get better at doing this stuff over time. I don't know. There still are a ton of unanswered questions, but everyone loves to make images, and so, when they rolled this out, you got a lot of hype behind it.
I think one of the questions for sorry, do we need to go somewhere, Tucker? Or
no.
Can I make? All right.
I'll let you know.
Checking, because I frequently
No,
miss
Tucker will yell
No,
at
you
you.
never look at the clock, yeah.
Yeah.
Okay, guys. One question is it going to be a discrete or abrupt sort of change when everybody just adopts it and it's quite disruptive to, say, the job market and the economy the economy in a good way or the job market in a bad way? Those two things aren't necessarily exclusive. Or will it just occur kind of gradually, the way that the introduction of IT tools, even though there were big leaps, say, in the 1990s, there weren't big portions of the workforce that were displaced. There were workforce displacements, but they were for other reasons. There was a gap building between skilled and unskilled, but that's a long-term trend. It wasn't a big discrete or abrupt break. That's what I'm curious about. Is everybody going to finally decide how to make ChatGPT or integrate AI, I should say more generally, into, say, the Microsoft suite, so we don't have to spend hours and hours doing tedious things, or we don't need to hire junior people to do, as you said, data entry? Is everybody going to figure that out all at once? Or is it going to be gradual? I kind of hope it's the latter. It'll be less disruptive and thus less, harmful to people. But it's an open question, I guess.
Let's take a quick break. When we come back, we got Stack Roulette after this.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network. It's easy to say that you're simply leaving your assets to your children, but without proper beneficiary planning, it can cause significant problems. Call Cushing Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing Dolan. Cushing Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Retirement planning is complicated enough without having a formal budget to help you maintain your lifestyle during your later years. This is Mike Armstrong from the Armstrong Advisory Group. Our new guide called How to Build a Retirement Budget was written specifically for this purpose. Our goal is to help take your financial concerns out of your retirement years. There are numerous issues to deal with when creating a retirement budget. Everything from understanding where your income will come from, to setting up a proper withdrawal strategy, to being able to remain flexible as market conditions change. This new guide offers structural guidance that may alleviate the pressures of creating your budget. You can request your copy right now by calling 800-393-4001 and ask for our new guide today. Once again, that number, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Consistently voted one of the top Caribbean destinations, the United States Virgin Islands is the perfect place for your next vacation. Whether you're looking for a romantic getaway, a long weekend with friends, or a family vacation, St. Croix, St. Thomas, and St. John have everything you need to enjoy that special time away from home. Take advantage of a variety of incredible promotions that are available right now. Go to visitusvi.com/promotions, where you'll find the details about all of these amazing experiences, including a stay at the Divi Carina Bay All-Inclusive Beach Resort and Casino on St. Croix. From the moment you arrive, you'll fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Don't miss your chance to enjoy America's Caribbean paradise, the United States Virgin Islands. Head to visitusvi.com/promotions for more information and to book your trip today. That's visitusvi.com/promotions.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Heads up, athletes, coaches, and parents. Play for life, not just points. Hypertrophic cardiomyopathy, or HCM, is the leading cause of sudden cardiac death, especially in black athletes in sports like football or basketball. If you feel shortness of breath, chest pain, and fatigue, or have a family history of HCM, talk to your doctor. Don't let HCM bench you for good. Learn how to stay in the game at heart.org/HCM student athlete. Your heart, your health, your move.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
The Financial Exchange is proud of our partnership with the Disabled American Veterans Department of Massachusetts. This year's 5K is Saturday, November 8th. And registration is now open. The race has sold out each of the past 4 years, and slots will fill up quickly, so don't delay. Visit dav5k.boston today to reserve your spot or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at dav5k.boston.
Mark, what do you got for me for Stack Roulette?
Something I hadn't thought about. The headline from Bloomberg is Corporate America hoards cash for tariffs over buying back stock. I paused in the wrong place there. Basically, they're not paying out. Companies can pay out their earnings after they invest whatever they need to and pay the people they need to. They can pay them out as a dividend, or they can reinvest, or they can buy back shares. In the past 30, 40 years, share buybacks have become a critical part of the returns that equity investors have realized. Sorry, I sound like I'm reading, but I'm not.
Sure.
Anyway, so a change in that trend, and I don't know how long-term this is. Let me just read the first couple sentences from Bloomberg, if that's okay. So U.S. companies announced last month the fewest buybacks in dollar terms since the COVID pandemic, an early sign of cash hoarding. The value of buybacks in the U.S. reached $39.1 billion in March, lowest since 2020. And if you look at a chart which they provide here, it's a pretty dramatic drop-off after a pretty steep ascent over the past several years. I'm not suggesting this will continue because, as you've said many times this morning, we don't know what's going to happen with tariffs. Even if we get some clarity today, things could reverse later in the week, depending on how our trading partners respond and stuff. But increased uncertainty leads to volatility in the real economy in many ways. I tried to get at that earlier, and this is evidence because lower buybacks mean lower returns to shareholders. They're not paying these their cash stockpile as to the same extent they were not paying out part of their cash stockpile, nor are they investing it because they're uncertain. There are growth implications. There are return to equity implications. None of them are good. This is just a little bit more hard evidence of how the tariff talk gyrations are affecting the real economy.
We go from that to talking about people throwing up on a cruise ship. The New York Times reported that more than 230 people infected with norovirus are sick on the Queen Mary 2 traveling from England to the Caribbean on a 29-day round-trip luxury cruise. Now, I don't know many things for certain in life, but I know that if there were 2,500 passengers on board and 224 of them were sick, and the boat was, at sea for almost a month, hard to imagine a worse scenario for me.
Yeah, that's a nightmare.
Hard to imagine a worse one. Maybe on a spaceship where you actually like can't even, stop anywhere to get off and, escape. That would be worse. But other than that, being stuck on a boat with 2,000 people, a tenth of whom are throwing up, sounds bad.
Bring me a dinghy.
I think there's a famous quote along those lines. There's an old Flemish saying, actually, that a rescue dinghy on board a cruise ship does not a successful voyage make.
Yeah.
It is. It is. Also, on the other side of the equation, apparently we're starting to see professional sports teams getting the memo that the price of food and drinks at the stadium is just too high. And so what you are seeing here is a number of different venues that are starting to offer, particularly in Major League Baseball, some cheaper concessions now. The Baltimore Orioles just unveiled what they're calling their Birdland Value Menu. It's got 11 different items that are priced at $5 and under, including hot dogs for $4, popcorn for $3.50, and peanuts for $2.50, and a beer for $5 instead of, $15 to $20.
Unheard of.
Milwaukee Brewers have what they're calling their 414 value menu. It's got 4 different items for $4 each, including a junior-size hot dog and junior-size nachos. And look, this is something that I think is going to expand to, a number of different areas as teams try to find that balance between how do we get the margins we want from concessions, but how do we make the prices not so high that people aren't buying the concessions? Unfortunately, I'm not sure that it really spreads to the Northeast just because cost of living is already high and, it's not really, I won't say not necessary, but I don't know that, local teams are going to view it the same way necessarily, but this is something that is starting to catch on in some different areas at least.
Got some breaking news before the show wraps up here, Chuck.
Oh, yeah?
Amazon is putting in a last-minute bid to acquire all of TikTok, and the New York Times is reporting that.
Amazon?
Mm-hmm. I don't know how you feel about that.
Well, from what perspective? I mean, on one hand, I don't think Amazon should be allowed to buy any other major company because I think they're too close to a monopoly to begin with. For Amazon, hey, I can see it being hugely valuable that, okay, you got all these TikTok influencers on there. Here's the link to click in order to buy the stuff right on Amazon. Gosh golly gee whiz, that sounds like a real win for them. For the Trump administration, it's a clean sell to an American company, so it makes sense there. If it's true, it's hard to see there being anyone who says no to this, actually. That's kind of wild.
Just get it done.
That's kind of wild.
More on that tomorrow.
More on that tomorrow on the Financial Exchange, along with, we'll detail all of the tariff announcements from later today. Busy show planned for tomorrow on the Financial Exchange.